Dear friends, thank you for supporting this channel on Patreon to join our growing family of donors, now 59 patrons strong. And remember, once we reach 100 active patrons, we will start sending out a 1-ounce U.S. Silver Eagle, autographed by your host, Dunnigan Kaiser, to one active supporter each and every month. Thanks for taking a minute to pitch in by going to patreon.com/reluctantpreppers and pledging your support today. Thanks very much.
Hey Reluctant Preppers, this is showing you just how easy it is to purchase silver without paying any premium over spot price. You just go to sdbullion.com/RP, scroll down and enter the special code to get silver without any premium, and they'll mail it to your mailbox, discreetly packaged. Inside you'll find a beautiful 10-ounce bar of fine silver, and you are able to purchase that and have it and add it to your stack and your collection without paying any premium, and you're supporting Reluctant Preppers along the way. Thanks.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a first-time visitor today. David Moadel is the Chief Researcher for Bonds and Gold at PortfolioWealthGlobal.com. David, thank you for joining us here on Reluctant Preppers.
Thank you so much. It's really an honor to be here.
We wanted to follow up with you on some questions. We've seen some articles written on PortfolioWealthGlobal.com that got our attention. And before I plunge into some questions about some of those topics, I wanted to give you a chance to first introduce you yourself to our viewers and understand why, when we reach out to various financial experts, why are we reaching out to you, and what areas of the world of finance are you especially attuned to?
Well, thank you for asking. First of all, let me say that I'm a big fan of ReluctantPreppers.com. I recommend everybody check that out on a daily basis. It's really a pleasure to be here. Yeah, so I am the Chief Researcher for Gold and Bonds for PortfolioWealthGlobal.com, and I also have my own YouTube channel called Looking at the Markets. But, I've been approached by a lot of newsletters in the last couple of years asking me to join the team. But I was really impressed with Tom Beck, who is the founder of Portfolio Wealth Global, and he became a multimillionaire in real estate at age 33. And he has many of the same core beliefs that I do, and perhaps your audience, your listeners might also have, which is that the government and the central banks might not have our best interests at heart all the time as investors and just as citizens, and that we really need to self-educate. And so at Portfolio Wealth Global, we've been putting out a lot of free reports, and we have a newsletter that I recommend people sign up for. And so, I'm just really proud to be part of the team.
One of the topics that you specialize in there as Chief Researcher for Bonds and Gold is bonds. We've had Gregory Mannarino of TradersChoice.net and others on, Rob Kirby from Kirby Analytics, talking about what they consider to be just a looming house of cards and a fire about to just take over in the bond market. In fact, a number of people have said people worry about potential collapse of the U.S. dollar. People worry about the potential collapse of the U.S. stock market, but several of those very experienced guests have talked about watch the bond market first, that the collapse will likely begin in the bond market. And could you talk to us about what is the concern? Because with burgeoning U.S. and other nations' sovereign debt being just at a exponentially increasing pace, that's been one of the risk factors, together with the potential for a rising interest rate environment that we're facing. But could you talk to us about what you see as the key risks in the bond area that people need to be aware of if they really want to take care of their family's well-being?
Absolutely. Thank you for asking that. That's a great question. I've actually had the privilege and pleasure of also interviewing Rob Kirby, Greg Mannarino. They've come on my channel as well, and they're amazing. I believe that the canary in the coal mine for all markets, the stocks, all the markets will be the bond market when that collapses first. I wouldn't be surprised at all to see it collapse up to 40 to 50% in the near term. I'm not even talking about the long term. And when the bond market collapses, people who think, oh, well, I'm in stocks, not bonds, so I'm safe. No, it doesn't work like that. It is interconnected. All right. So we've had this experiment, we can call it that in quotes, since 2008 with the central banks, which is that we've had zero interest rate policy, and some regions of the world negative negative interest rate policy, and we've seen how that has turned out for retirees, savers, investors. Not so great. And people who own bonds now. Well, now that finally we're starting to normalize, if there is normalcy anywhere to be found in this regime, we're starting to normalize interest rates, starting to get it back above above zero. Now, I don't think it'll ever become. You might remember. I think we might both be old enough to remember when bond yields used to be around 16% at one point.
Yeah.
In the early 1980s. I don't think we'll necessarily get to that point anytime soon. But now that bond yields or coupon rates are starting to normalize, I think that people who believed in the system, who believed that this is a risk-free rate, no, there's huge risk. And as their current bonds start to deteriorate, I imagine it's only going to get worse. And so if we're seeking yield, we need to look at alternative investments because, no, I don't trust that the government has my back. I don't trust that the central banks and the Fed have my back. And this is not a political statement. This has been true no matter who was president, no matter who was in charge, and no matter which nation we're talking about, by the way. This is not just the U.S. Fed. This is not just Janet Yellen or Jerome Powell, anybody in particular. So actually, at portfoliowealthglobal.com /bonds, there's an excellent report by Tom Beck on what's going on with bonds and what are some alternative investments that could yield between 8 and 12%, much more safely and much more reliably. So if people could check that out, I think that'd be great.
You mentioned stock markets in passing there when you were talking about they're not a safe haven. If the bond market is going to collapse, it'll take the whole house down with it. But we've been talking. A lot of people have been talking about the bubble of everything over the last fourth quarter, especially. We had stock markets up, bond markets up. We had cryptocurrencies up. We had real estate up. I mean, everything was up. How can everything be? Well, okay, except for precious metals. That was a rare exception.
Right.
But often bull markets end with this blow-off top and euphoria, and people were talking about, is that what we were observing or not? And they certainly have seen some major stumbling and staggering of the markets through January, February, and in March. Across the board, stocks and cryptocurrencies and so on. Do you believe, based on your research, that the current setbacks that we're seeing in the stock market, for example, are just a bear trap, and the stock market is going to go roaring back out because the euphoria has evaporated? Or are you seeing that this is in fact the beginning of the end, and we're seeing a major rotation or turning out of stocks and into other safe haven directions?
Yeah. Well, while we cannot be in the business of predicting, because that is not a great business to be in, not a successful business to be in, I can say that if we pull back the chart a bit, let's say of the S&P 500, just as a market indicator, and we notice that 2016 and 17 were so calm. The forces that be were pulling the stock market up slowly, gently, and I believe that whoever was in charge, whoever the shot callers were, wanted it that way. And I think we quite possibly have a new shot caller now. Because if we look at the markets in the last couple of months, 1 to 2% daily moves in the S&P 500, that's not normal. That looks to me like the M word. Here comes manipulation. It looks like extreme volatility. And if you, again, pull back the chart and look at what happened prior to 2008 or 2000, we noticed a slow, steady decline for a number of years. And then suddenly, perhaps a regime change, whatever, caused massive volatility, these huge daily moves. Investors are being jerked around, retirees, people who thought that, just put your money in the S&Ps and you'll get a safe 8 to 10% per year. Again, nothing safe. All right. If you want more relative safely, find yield elsewhere. Stocks, I don't think, are a great place to be right now. Not that they were from 2009 to 2018 necessarily, but to get in now at the potential top of a bull market, just not where I would want to be right now. I would go into much safer haven assets. Precious metals I love, especially the physical version of those. And there are other ways to get yield. And as a researcher and part of Portfolio Wealth Global, I always seek those out, those opportunities.
Before we dig into some of those other angles, can we at least touch on things that people are extremely familiar with, such as the U.S. dollar? A lot of people thought, well, okay, if you want to protect your nest egg that's been growing with the stock market and get out of stocks, then you're selling and you're holding cash, and cash is king and that sort of thing. But we've seen the U.S. dollar has been on a decline over much of the last quarter. And so do you think that's is it oversold, or is it going to continue to lose purchasing power? Some people have talked about Trump's protectionist tariff policies might be a real tough market or environment for the dollar to be strong in. And we've also had various people on, oh my gosh, I can't even list all the number of our visitors who've talked about Chinese oil, gold-backed oil bonds, and all kinds of other direct trading between BRICS nations, circumventing the U.S. dollar as the global reserve standard. So, could you just give us, in a nutshell, what you think is in the cards in the near term and maybe the midterm for the U.S. dollar's role in global finance and its availability as a safe haven?
Yeah. When somebody says cash is king, it just makes my skin crawl, because cash has not been king for a long time now. Ever since in 1971, the U.S. took us off the gold standard and made it fiat currency. And you already know this. But it's just been deterioration year after year. And again, for retirees, for savers, investors, it's just been miserable. Currently the U.S. dollar is at near a 3-year low. And in 2017, the dollar fell 10%. That's in 1 year. Okay. So anybody who thinks that cash is a safe haven, it's not. The government is continuing to print money like crazy. That hasn't stopped. Again, we have regime changes. We have Fed changes. Doesn't matter. It's not a political thing. It's not a Republican, Democrat, or independent thing, although it is an independent thinker thing. Sadly, the debt to GDP ratio in the United States is close to 100%. That's pathetic. And the value of any currency is based on trust. Where's the trust? Where's the trust in the government? Where's the trust in the Fed and other central banks? It's just not there. Things that people have counted on, Medicare, Medicaid, Social Security, entire governments could be on the verge of possible collapse. Can't really give a timeline on that. But look at the chart of the dollar compared to other currencies. It's just going down and down. I'm not going to fight that trend. I'm not going to be a hero and try to go into all cash right now. I don't know about you, but I'm not ready to take on that first mover role.
Well, talk to us a little bit more, if you would have been, about the physical precious metals, gold and silver. One of the things that we've heard a lot about is the gold-silver ratio and how historically out of balance that is right now. It's so far from the mean, it's crazy. I mean, we've had David Morgan on several times talking about gold, silver coming out of at the ground with a gold-silver ratio something like 9-to-1 or 10-to-1 or 11-to-1, and yet the ratio is like over 80-to-1 right now. The price of gold, the price of silver, which makes people keep saying, well, silver's a screaming buy at these prices. But do you agree? And what do you think about the prospects of holders of physical silver or gold going forward?
Great question. It's tough to get in this debate because I love me some gold and I love me some silver. And so I'm not going to tell anybody to buy or sell either one. I will say this. I'm glad you mentioned the gold to silver ratio. A lot of people watch the price of gold, which is in the 1300s now. They'll watch the price of silver, which is, I think, a bargain in the 16s now. But they may not watch the gold to silver ratio, which is now in the low 80s. And recently it hit around 82. Hasn't done this, let's see, since 1971, since we got off the gold standard, it's happened 4 times. So after this happens, silver tends to outperform. And I love silver anyway. So if people are holding both gold and silver, maybe lighten up on the silver a little. Lighten up on the gold a little bit add a little silver. It's just a matter of readjusting. Also, in terms of seasonality, precious metals generally have a tendency to go up in the last 3 months of the year, October, November, December, and then peaking at the very end of December. So now that we're still early in the year, why not accumulate? Why not get involved? And actually at Portfolio Wealth Global, we're always seeking different ways to make plays on gold and silver and precious metals generally. Yes, you can add the physical to your portfolio. Nothing wrong with that. Great hedge, great store of value. But also there's a report if you go /gold playbook at portfoliowealthglobal.com. Tom Beck has found a number of ways to play gold in addition to buying the physical. And so I hope people will check that out.
Before we leave the topic of what people consider real assets and that sort of thing, let's touch on cryptocurrencies, because they've been such a volatile story. It was like the awakening of most of the financial markets throughout 2017, although not a lot of participation by institutional market participants, as far as we are aware officially. But some definite bashing by big names in the institutional arena. But now we've seen a significant setback, sometimes to the tune of approximately half the value being chopped off from the peak. Some people were calling it a euphoric, blow off top at the end of the year. So, what's your view of cryptos? Is the story, is this flash in the pan basically burnt over that arena, or do you see that just coming roaring on back as it has so many times in the past when people thought it was high, but compared to what, that it still had a lot of room to run? What do you see forward for cryptos?
We've had 11 massive crashes of 30% or more in Bitcoin. This is the 12th one. We're in the middle of it right now. It's around 70% down from the top. Talking about Bitcoin, top between 19,500 and 20,000 was the top. Now we're at around 7,500 or so. So yeah, that's a pretty big crash. And for people who are new to the crypto space or to Bitcoin investing, this may seem unbelievable. They probably haven't seen anything or experienced anything like this before. For people who've been aware of it since the beginning, this is just another drawdown. And we survived. By we, I mean investors. We've survived the other 11. I think we can survive this 12th one. Also, I believe that cryptocurrencies, because Bitcoin tends to lead, the others tend to follow, generally speaking, since that's the best known one, has the biggest market cap. As soon as we can find the technology to allow Ethereum, Bitcoin, Cardano, Dash, Ripple to communicate with each other on their various blockchains, I think that'll make a big difference. They're working toward that technology, but when it's there, I really think it's going to rip. Also, when central banks start to buy cryptocurrencies for their own reserves, which I do believe will happen, they're going to have to recognize the value of these cryptos sooner or later. I know they think cash and bonds are king. Well, you and I might know a little better than that. I'm sure we do. Also, when fund managers, Wall Street, starts putting their clients' funds into cryptos, that'll be a big boost. People talk about when Amazon starts to bring crypto payments, that kind of thing, Walmart and Target. Sure, but how about the fund managers who control so many people's money? That'll be huge for the cryptocurrency space. I'm not going to call a number for Bitcoin, but I do believe it'll reclaim that all-time high. I don't think it'll be too far away. I'm pretty bullish on it.
If we could turn our attention to other real assets than precious metals, you wrote an article recently about another element, zinc specifically, and we wanted to relate that back to the Chinese market and China as a producer of some of China is undoubtedly a world superpower, and both in many ways, not just militarily, politically, but also economically, and they've shown in the past their ability to take over entire industries like the steel industry, the concrete industry, the solar industry, that sort of thing, by outproducing all other global players combined. In the case of mining, they've been now imposing some environmental restrictions, which have been a long time absent in that space compared to many other countries. Do you see this sort of a collision of their historic policy of dominating the production side, the capacity side of markets, versus their new environmental stance playing out and to actually create any shortage in that area? What do you see from the research that you've been doing about this strategigic material?
Yeah, zinc is undervalued and underappreciated worldwide. It is if gold and silver are number 1 and 2, I wouldn't be surprised if zinc is number 3 in terms of use, in terms of shortage. There's a huge zinc shortage already going on. With China's $2 trillion infrastructure plan, they're going to need zinc, and they're going to need it worldwide. The demand keeps growing at 2 to 3% annual rate for zinc. The mines are being depleted around the world. Yes, China has environmental restrictions going on right now. And so if you're going to get into the zinc as a space as an investor, you don't want to just you have to know what you're doing, because in the mining space generally, which has been brutal, I'll admit it, okay, investing in miners has been rough going for a while now. You have to pick and choose carefully because you can, unlike gold and silver, which tend to be more steady and stable as investments, the miners can go up a lot, and I'm sure you know they can also go down a lot. All right, so be careful what you invest in. There are actually 8 pure play zinc companies in the world right now. And most of them are speculative. Most of them I wouldn't even touch or look at because at Portfolio Wealth Global, as a researcher, when you put out a report, people take it seriously, and now you're responsible for helping other people to make decisions for themselves, which is what this is all about. There is one company. They have resources. They own 2 mines in Peru. It's called Zinc One Resources. If people want to check that out, they have to make their own decisions. But Peru is very mining friendly, very zinc friendly. The ticker symbol, you can find that out in a special report, how to get access to it, learn all about it. If they go to portfoliowealthglobal.com/zinc riches, they can read all about it, how they can get involved in this, again, Peru mining friendly, company that I personally believe in. Keith Neumeyer, Mr. Silver himself, right, believes in it. Goldman Sachs believes in the zinc space. Again, after gold and silver, I really would like to see more people look at zinc as a serious investment opportunity.
You mentioned a couple of times earlier in our interview about how people who are seeking safer havens than the bond market or the stock market or cash can seek for yields. Is there a report, or how can they find out more about your thoughts on where there may be safer yields to be had?
Yeah. Again, bonds. This is the worst time possibly ever to be in bonds. I really feel bad for people who have bought into the bond promise, which was a government promise and a central bank promise, which, surprise, surprise, went bust. So that promise wasn't kept. Cash. As we discussed before, I can't imagine cash being worth more in the coming years. I imagine it'll deteriorate quite quickly. So if people go to portfoliowealthglobal.com/bonds, and another one is /cash flow. That's 2 different reports, different ways. I'm always looking for different ways to get higher yield. I'm thinking 8 to 12%, and usually closer to 12%. That's not unreasonable. All right. When I was a kid, you could put your money into bonds and get a reasonably safe 5% per year or more at times. That dream is gone, and so we need to look in other spaces and other places. So in addition to the gold, the silver, the zinc, and certain stocks, be careful though. I'm not talking about investing in the S&P 500 as a whole right now. I don't think it's the best time. I recommend be nimble, pick and choose, know where to go, and research whatever you do before you buy. Research makes you rich over time.
Yeah, I cracked a smile when you first mentioned 12% yield, because my mind flashed back to when my wife and I got married, and we took our gifts of money that we had received as wedding presents, and we went and we bought a CD at the bank, 1-year CD, 12%. 12% yield on that CD for a 1-year CD is like, those days are not here now. So if you want to find those kind of returns, it really is helpful to seek some other options. Before we let you go, if we just have a couple more minutes to get your way in, because this is a very interesting time and it promises to be a very interesting year politically as well. More than ever. The first time I really heard the deep state mentioned was at a Ron Paul Institute Peace and Prosperity Conference a couple years ago in Washington, D.C. They had multiple representatives and former representatives, and they're talking about the existence, and people from the military, retired, talking about the existence of the deep state and the reality of that and how it impacts ordinary Americans' lives in ways that they could never imagine. Do you believe that corporations and the deep state have penetrated into ordinary Americans' lives because we have let them? We've had a lot of guests on talking about privacy and whether we can protect ourselves or not, but do you feel that we've opted in voluntarily into this situation?
Hey, go on Facebook. See what. I'm not even talking about the recent data leak at Facebook. I'm just talking about how for years people have voluntarily given up their location, what they're doing, who they're doing it with, who their friends are, what their political affiliation is, what their marital status is. People are doing it voluntarily now. If you own a cell phone, they know where you are. If you're on the grid anywhere, they know where you are. People probably are not as aware as they ought to be of how many security cameras there are pretty much everywhere. If you shop for anything at all, if you use a parking garage, if you go in public, pretty much. And we've given up our freedoms one by one to privacy, I'm talking about, although other freedoms as well, voluntarily. They don't need to bug our homes and workplaces to spy on us anymore. So, and of course, the deep state loves this. They love how willing we are and ready we are to give up our privacy. And so when it comes out that Facebook sold our information, and nothing against Facebook in particular, if people use it, that's fine. But to find out that Facebook sold people's information or just gave it up, that didn't shock me at all. When I hear about data breaches, people's credit card numbers, things like that. I remember back when Target stores, there was a data breach. People's credit card numbers were being given away. So many people were shocked. The mainstream media was shocked. I was like, okay, business as usual. So the deep state is penetrating our society with our permission, or most of our permission. Now, at Reluctant Preppers, that's what I love about Reluctant Preppers and reluctantpreppers.com and what you do, because you are not the mainstream media. You are letting people know, people who are willing to listen, that they do not have to give up their freedoms. They don't have to give up their privacy, and they can question what Big Brother and Big Sister are doing. And so I'm really on board with what you're doing with that.
Well, thanks for your updates and for joining us here. We've been delighted to have you join us. We've been speaking with David Moadel. He is the chief researcher for bonds and gold at portfoliowealthglobal.com. David, if you could send me email with those specific links in there that you mentioned.
Yep.
We'll make sure and put them in the information, the description below the video, so that people can follow up on those. They really like to be able to click on those and get more information. So just have to thank you as you've been so generous with your time here on Reluctant Preppers.
Thank you, sir, and hope to meet with you again. And it's a real honor and pleasure. I love reluctantpreppers.com. People should be using this as their main source, not an alternative source. So thank you so much. I appreciate it.